Well, TD Ameritrade's Investor Movement Index saw a dip in September as it proved to be a challenging month for investors. Bond yields rose to their highest levels in nearly 2 decades, and the S&P 500 struggling with losses. But TD Ameritrade clients still found themselves as net buyers of equities. Here to break this all down, we've got Joe Mazzola, Charles Schwab, Director of Trading and Education. Good to talk to you today. So still net buyers, even with the choppiness that we saw in the market. Where are investors going?
Yeah, thanks for having me. I think what is insightful about this report is it aggregates what clients are actually doing, right? What they're doing with their positions and their activities. And so what we saw was really a rotation, if you will, a rotation maybe away from some of the economically sensitive areas, discretionaries being one of those, and movements into a little bit more of a defensive standpoint. We saw that movement into healthcare. But I think my biggest takeaway was really the fact that clients were very selective in their purchases. It wasn't index or ETF buying that was really driving this. It was really more driven by movement into certain names. And, some of those names would include Apple, Nvidia. And these are names that even in an economically sensitive regime, these are names that have good balance sheets. They have access to cash. They have good net interest coverage ratios, and so these are some of the factor analysis that I think our astute investors were looking for.
Joe, what always surprises me about these surveys is regardless of where the market is, you've got sort of these banner names that investors often turn to. Apple, one that you just mentioned, Nvidia, another one. What about somebody like Tesla?
Well, we've seen that before, right? We've seen that before where they've moved into that name. I think the reason we didn't see that necessarily in September was just kind of the move out of consumer discretionary as a whole. Tesla being a rather large component within that sector. I think the biggest selling we really saw was kind of on leisure and hospitality. We saw that in terms of names like Affirm in terms of financing that's cost. We saw an Airbnb; those were big net sellers as well too. So those were the names that they kind of moved away from. Tesla just didn't really move the needle in September as much as it has in prior months.
I know we're talking about equities right now, but increasingly we have seen guests come on who talk about this exposure further to fixed income because of the yields that we're seeing, particularly in treasuries. What are you seeing among some of these retail investors about increasing their exposure on that front, particularly through ETFs?
So what I can tell you is that right now, stocks, they have competition, right? I mean, for many years, the story was TINA, right? There is no alternative. Well, there is an alternative now. Because if you look at something like the earnings yield on the S&P 500, it's around 4.75, and then you look at the 10-year yield right now, and that's just under 4.7. So basically, you're equating expectations for earnings growth, and you're trying to measure that versus what you can get in a 10-year. And with expectations for earnings, Q3 earnings to actually come down 0.3%. A lot of investors are being very selective in the equities that they choose. Like I said, this is not people buying indexes, buying ETFs as much as you're seeing them being stock pickers. And I think it's a good market for active investors right now.
Yeah, so to being a lot more discriminatory and looking at individual
Absolutely.
stocks, where do some of the energy names stand in all of this?
So actually, what we saw was a net sellers of energy in September, Exxon being one of those names. Part of it, I think, was just the rapid move that we saw in crude prices, and it seems like traders and investors maybe faded that move a little bit, and I think that their timing was pretty good, kind of considering what we've seen. Now, that was all pre or before the conflict we're seeing in Israel right now. So crude prices are up again today, but they had pulled back, and we'll see, when the October report comes out, whether or not investors look to scoop up some of those shares.
Charles Schwab's Joe Mazzola, good to talk to you today. Appreciate the time.
Thank you.